You're welcome to this session, gentlemen. Here we shall be looking precisely at what we look out for each time we want to enter trade. The strategy that we're going to be using, we're going to discuss that in this session. And then eventually, what you're about to see, it's the same strategy that we're trading in-house in the academy. You're going to learn exactly how we do it. We're not going to be holding back anything, okay? We're not going to be holding knowledge. You will learn precisely how we approach the market, how we trade it, and of course, as we are starting, it's good to mention that there is no strategy that it's 100% profitable. If anybody tells you I have a strategy that doesn't lose at all in the market, that's a very big lie. Okay, but the most important thing is risk management is key. First, you must have an edge. Your strategy must give you an edge. Statistical edge, which means that statistically you must know what's my win rates. Okay, what's my chances of survival in this market? You don't trade the market blindly. And once that is in place, then you must know, okay, what are my risk management measures? It's very, very vital, and you can't survive long in the market without a proper risk management method. In summary, you need a plan. Okay, just like every other business, you don't do business without a business plan. You don't go into trading without a proper business plan on how your trade is going to work out. What time frames you're going to trade? What's your strategy? What time of the day, if you have specific times of the day that you enter trades, are you going to enter trades? What do you look at for before execution? Okay, that's your plan must detail that out. Okay, and very importantly, risk management. You must identify how and state very carefully and follow how you how you approach your risk management. How do I manage my risk? Okay, because that's what ensures that in the long run, you don't burn out your account. You don't blow your account. Okay, you're giving yourself a fighting chance. If it's whether or not there are going to be losses in the market here and there, yes, there will be. Okay, but when your risk management is in place, your chances of survival becomes very huge in the market. Okay, you don't do away with that. It's very important. Okay, if time permits, we are going to also, of course, with time, if that's convenient, if you want that, you can let me know in the comment section how you want. If you want a moment, guys, if you want me to put us through on how we manage risk at the academy. There are rules that guide everything that we do at the academy. Okay, we are operating a rule-based trading. That's what we believe in. So in this session, I just want to introduce us briefly to the strategy that we are going to be using, and then show us how it's going to be automated, so that in real time you can get to see how we trade, the strategy that we follow, okay, and execute trades. That will start on Monday morning. So, but for this class, let me just show us. Okay, basically, there are three factors that that's what we teach at the academy, that you must be aware of concerning the market before you enter. Okay, you don't execute any trade if you're not aware of these three factors about the market. Number one is you must be able to tell what is the direction of the markets. So we'll call it market direction. You must treat trading as though you want to travel. If you want to make a journey, you must know where you are going. If you don't know where you are going, it will be very difficult to get there, or to even know where to board vehicles that will take you to your destination. So you must know the market direction. That's the first thing that you have to determine on the charts once you get to the charts for any asset at all that you want to trade. Okay, number two, okay, by market direction, we mean you have to know the market structure. What's the structure of the market that you're currently working on? By that also, we mean what's the trend of the market? Is the market in an uptrend? Is it on a downtrend? Is it a ranging market? In which case you want to wait. Okay, that must be determined. Okay, number two factor that you must be able to tell about the asset that you want to trade is location, the market location. And like I've said, if you already know where you want to go by market direction, then it's important to know where you need to board your vehicle. That's where location comes in. You must know, where do I go to board a vehicle that will take me to this route, that will take me to this place that I want to go. So location is key. It's very important. You don't do without that. And by location, we simply mean support levels, support and resistance levels. That's what we mean first by location, support and resistance levels. Of course, by location, we also want to see FVG, fair value gap. And we also want to take note of order blocks. This guides us to know first where the market is, where the market needs to come to before we can enter the market. This defines the place for us. The market anywhere is not the right place, for entry in the market. You must be able to determine the right location for your entry before you enter. Okay, then third, the last thing that we look at for before entry is the right vehicle. For simplicity, I just use vehicle. Okay, like I said, I gave an analogy of a traveler. You must know first of all where you want to go, and then the next you must know where you need to go and board the vehicle. That's where your location comes in. But when you get to where you need to board your vehicle, you will understand that every vehicle might not be going to your direction. So it's important to wait for the right vehicle that is going your way, that needs to go the path that you have already identified as the direction. So by vehicle, we simply mean special candles and signals. So there are candlesticks that we see. Of course, bullish candlesticks, a bullish candlestick pattern will tell you, to take a bullish trade, and then bearish candlestick pattern will tell you to take a bearish trade. You must see the right candlestick pattern at the location where you're looking at. We are conservative traders. That means that we hardly trade with limit orders. Okay, we trade with market order or stop, buy stop or sell stops. The reason being that we need to see confirmation, and our confirmation comes in form of the vehicle. Okay, it must be printed on the charts. It must be printed at the location before we can take a trade. In subsequent classes, in subsequent sessions, we are going to be diving into each of these one by one. We'll discuss what exactly we look at for. How do we identify the direction of the market? How do we identify the location of the market? How do we identify vehicle? But precisely what we need for this session, our trading sessions are just factors that will help us execute a particular strategy. And it's a very simple strategy that we want to be trading live here. That strategy, it's simple strategy. It's just AMD. Okay, AMD is a smart money concept. It simply means accumulation, manipulation, and distribution. We want to see price manipulate a particular key level. First, we want to see, like I've mentioned already, we want to understand the market direction. Where is price going to? If we know the market direction, then we can talk about the location. Where do we wait for price to come? For instance, if you observe this asset, this is Euro USD on a 5 minutes time frame, you would already have seen that we've had price do this, give us a low. Not necessarily, okay, when you compare to this, that was a lower low. If you compare that to here, if you compare this place to this place, that was a lower low. But of course, you're working with the overall trend of the market. You're not working with this internal structure. You're working with the overall structure of the market. So this would have been a low, not yet a lower low. I'm only marking that because it costs a lower high. You would have expected that if the uptrend is still continuing, then we want to see price give us a higher high from here. But it gives us a lower high here. And then from there, you've been able to, the price has been able to show us a lower low, which gives the indication of a potential continuation, to the downside. If this is printed already, then it's a question of where can we expect to enter this market. What helps us, the strategy we are going to discuss eventually and that we're going to be using in this, for this, our sessions, is what we call the accumulation, customary to us, how we approach it. Everybody have how they approach it. First, we want to see an accumulation in the markets. For instance, in this case, accumulation is basically a zone in the market where price appears to be ranging. Okay, like in this case, you can see when price pushed down, it was ranging here. It was ranging just around this place. You can see there was a range of price. It was ranging here. Now we want to see a manipulation. How does that play out in the market? We want to see price appear to move in an opposite direction. Okay, we want to see it close back into the range. That's what confirms to us, okay, that it's been manipulated. The reason being that there are breakout traders that are waiting for price to break out of this box for them to make their trade. So immediately this green candle printed, a lot of traders must have jumped into the market for a buy, believing that it's going up. What we want to see is price to retrace that move into this zone, especially closing below the green candle. That's what confirms to us that there's been a manipulation in the market. Are you going to be right all the time? No, you won't. But most of it on the table for you. Okay, so that's what we want to see. Immediately this happens and price retraces into this zone, closing below the last bullish candle that formed. That's our entry. We believe that the distribution has started. Okay, and if you have taken this trade like we did earlier on, you would have made the profit. You can see how far price got to move eventually before pushing up. Okay, now that's what we mean by having identifying a manipulation zone. Okay, this was manipulation. This was accumulation zone. Okay, this was accumulation zone, and then we saw manipulation of price here. Here we saw price accumulating. We waited to see a manipulation, and then we took advantage of this distribution. Okay, you would have, if you are taking a short trade, this is where you would have entered, of course. And sorry, if you are taking a short trade, this is where you would have entered at the close of this candle here. And would have had our stop loss at the tip, just slightly above that manipulation wave. And then take profits 2:1 is totally fine. Okay, or we can target the last price action here where it happened also. You keep seeing this play out all the time in the market. It has also happened here. You would have also observed that here you have price ranging within this zone. And then this is the manipulation that you want to see. And then you want to see price eventually close back. So you could have gotten in for a buy trade here. Your stop loss slightly above that, the low of that manipulation wave. And then you could have targeted at least 2:1 risk to reward ratio. If we keep going through the chart, you keep seeing these playouts. You keep seeing these playouts in the market. That's basically what we look at for, and that's what we take advantage of. Okay, that's what we look at for, and that's what we take advantage of. Subsequently, we're going to go through this in live sessions so that you get to see how we analyze these trades in live sessions. Of course, on Monday morning, do well to join us on Monday morning so that you can not only see how we do it in a live chart, but also benefit from what we're doing. Okay, we'll continue from there. If you look here, we have this has been automated. Okay, in fact, in much of our sessions, we are going to allow you take advantage of our signals as it plays out in real time. Okay, we'll turn this on for you. You get to see how we trade this. Of course, this has been optimized. It's more advanced than what I just showed you here, but what I've shown you here, it's very much reliable, and you can depend on that to make profit in the market. So if I just turn this on, you can see some of the trades that we were able to take today. We were able to take this trade. We were able to enjoy this move here as well. When price made this retracement, we're able to benefit from that. Okay, and now you can see there's a call for entry here, and this is going to help you very much so, because you would have been in profit if you had seen this already, but that trade is still on. This is the point of entry. You can see the recommended stop loss depending on the account size you're using. This is set for account size of $500. You're not expected to risk more than $10, of course, as 2%. This is the right lot size to use for this particular trade. So for this moment, you will be in profit. Okay, you can follow this price all the way down as it goes. This is where you ought to put your stop loss. You're going to be taking advantage of this on Monday. Okay, starting from Monday morning. Don't miss it. Make sure you subscribe. Make sure you stick around. You can see the trade that we took earlier on, okay, earlier in the week. So do well to stick around and enjoy. That's the idea. You can see these are reliable signals. These are reliable. This is a very reliable method of trading. We have been trading this over the years. It's been giving us profits. So there's no question of whether it's profitable or not. So join us tomorrow to enjoy these signals in real time. Guys, I just wanted to set up this, and then on Monday, rather, we kick off in full force. Thanks for being part of this, and as always, you can drop your comments or your questions, and I will attend to them all. Thank you very much. Do have a wonderful evening.